Hi everyone, hope you're all doing well, and today we're going to talk about some of the Boohoo earnings and the Card Factory earnings. There's a few other stocks, but I thought these are the two ones that I think you guys wanted to see. So we'll kind of break through these earnings, see what happened with Boohoo, get the new update as well from Card Factory and how the recovery play is going on there. But if you could smash the like button, that'd be absolutely amazing. If you are new, make sure you subscribe, and if you do want to know when I'm buying and selling stocks, make sure you join my Patrons group. Link is in the description, and also if you want to start buying these stocks, there's a link to a free trade account and Traded 212 account, and if you join through them links, you also get a free share. But we'll take a look at these two companies. So as recording this video, there's not much going on with the stocks. There was so much built up about it, but generally it's been such a chilled day really. Just looking at the stock charts right now, Boohoo it did open up quite low down, and then it shot up and recovered. And then Card Factory as well shot down and it recovered, but they are starting to dip again now. And as recording this, Boohoo's down 3% and Card Factory is down 4%. So I mean, they are kind of downtrending a little bit as the day goes on, but generally you can have that in a normal day, and there wasn't really that much action at all today with these stocks and reporting earnings. And this is why I always say, when people ask me about, buying in before earnings, selling in before earnings, you cannot predict what is going to go on and what's going to happen with these companies. And, that's the risk. At one point it looked like these stocks were going to go down today. They started recovering, they come back down again. And that's the thing is, as a long-term investor, these sort of movements don't really affect you. You're just kind of looking at the fundamentals of the company and, is the company in a good position? And if the company carries on going in a good position, the stock will eventually move in the right direction for it. So what we'll do is we'll actually break down some of the Boohoo earnings, and then we'll move to the Card Factory next. So this was the trading update from Boohoo. So we can see here, there's the increase in sales was really good. I think out of a 10 rating, I'd give probably these Boohoo earnings a strong 9 out of 10. They were pretty good. I think that the stock only hasn't moved up because there was a lot of short seller pressure really on it. Just because of that dump, it seems like a lot of people bought these shares, tried to cause a massive sell-off by selling off so much shares. But they were good. They were 9 out of 10. There was one thing that I thought would have made it a 10 out of 10, but I'll pretty much give them a strong performance. On the UK front, there was a 40% increase on revenue, Europe 30%, and USA 52%, and rest of the world 20%, which was a pretty decent increase. The only reason why I didn't give it 10 out of 10 is the US growth. I thought that in the 4 months to December 31st of December, that could have been a bit more in the 60% range. So that's the only reason why I didn't give it 10 out of 10. I think the US growth could have been slightly stronger, but still 52% is a pretty decent growth rate. The UK growth was really good. When we look at the 10 months to the 31st of December, you kind of see here how much the percentage of the increase was. And then we've got a couple of highlights here. So we can see strong revenue growth of 40% in 4 months with growth across all brands and geographies. Significant progress made on the Agenda for Changes program. We've got a little bit of a breakdown that a little bit later on, but I won't go through too much of it today just because I've covered it so much on the other 100 Boohoo videos that I've done over the last kind of couple of months. So I won't go through that too much, but that's obviously one of the big things that has really stopped Boohoo from coming a £4, £5 stock this year. So hopefully that's out of the window, and with these earnings it carries on going up. I think that it will probably see a slow progress up, I think, from these earnings because they were pretty decent. Successful relaunch of the Oasis and Warehouse brands. Gross margins in 4 months, 53%, down a little bit. Net cash, this was really positive, 386 million. When at August it was 344 million. So I mean, that cash pile is building up very, very quickly. So it'll be interesting to see what they do about cash and what plans they have. It says here to support future growth. I mean, that might lead to either another buyout like Oasis, like a Warehouse. Maybe they have a big marketing push. We'll see what happens. There wasn't too much about it, but that's pretty good on that point of view. Close to finalising an extension of the UK warehousing programme with a new site to open in 2021 to create up to 1,000 jobs. And we know this is to help them with the whole Leicester factory situation that's been going on. There also was a guidance. So following the strong peak trading update, group revenue growth for the financial year 28th of February 21 is expected to be in the 30 to 38%, ahead of our previous guidance of 28 to 32%. Now, I think realistically we knew that Boohoo was going to be in the 30% range, but they've actually raised the outlook to 36 to 38%. That's really positive because obviously we've had a decent beat here, and obviously when you raise guidance, that's normally the signal for the stocks to go up. So I am surprised today that the stock hasn't moved up on a raise of guidance. And obviously the raise of guidance as well, like on the weekend, was a raise of 8%, which is a really strong raise. Obviously COVID has helped that, but you would generally think like a stock that raised guidance that much would move in a better direction. So yeah, I mean, that was really positive on that sort of front, and it is in a really good position. The group continues to expect to deliver adjusted EBITDA margin for the year around 10% despite COVID-19 related headwinds. And also our medium-term guidance remains 25% sales growth per annum and 10% adjusted EBITDA. I think realistically that 25% sales, we do want to see Boohoo probably stay more around the 30% rate. So I think that will be somewhere that they'll probably beat on. But that's the thing, we do want Boohoo to like put on the numbers that they will beat. So I can understand why they went in with 25% sales growth, but I think realistically we will be seeing Boohoo probably around a 30% rate. So everything's good on that point of view. And there was a little bit of an update on the agenda. Like I say, it's probably worth a read through if you're not up to date with everything that's going on. But yeah, I mean, that's obviously that's been the biggest threat to Boohoo. So I think that we should hopefully not see any more of this going forward. And this will probably be the key thing that leads Boohoo to like a £5 stock. But overall, like the numbers were good. They were really, really good. A solid 9 out of 10. The stock probably would have deserved to go up. But we know that Boohoo has a history of not moving that much on earnings. So yeah, it might be one of those days where it just drops down a little bit, but over the course of the next maybe month, 2 months, we see Boohoo trending, and I don't think it'll be too long until we do see the £4 mark on Boohoo. But yeah, overall a good 9 out of 10 earnings, and very happy with what came out of Boohoo side. So what we'll do is we'll move on to Card Factory now, and like I say, the Card Factory pretty much opened up flat. It went down, came up. It's moved down a little bit since then, but we'll go through Card Factory's earnings. So for you guys that don't know, Card Factory is a bit more of a turnaround play. So we know that Card Factory was going to have horrible earnings because they've pretty much been closed so much. But the big thing is seeing the highlights of, is this company now starting to move in the right direction? So we got here the trading update. So we'll go through this and break down some of the numbers. So Card Factory, the UK's leading specialist retailer of greeting cards, dressings and gifts, announced its trading update for the 11 months ended 31st December 2020. So the sales here for the 11 months was 281 million with a financial year of 424 million. So we knew that was going to happen. There was no shock there. It doesn't look good, but we knew it wasn't going to be good. Store sales year on year decline of 38%, and we knew that was going to drop. We knew that was going to be negative, and we see here the openings, the close of the year was that stores were closed 37% of the available trading days. So that's very high. We knew that this was going to be the situation. So yeah, I think everything on that line we kind of knew was coming. And then we get on the second line, we get something that we've been looking really forward to, which is online continues to perform very strongly. Cardfactory.co.uk achieving 130% like-for-like sales during the period, and Getting Personal achieving a 10% like-for-like. So on the online sales point of view, that was really good. I was kind of thinking that it was going to come somewhere. I was hoping for about a 60% like-for-like sales, but 137% is very good. So I'm very happy with them sales. If I said that I would be very happy, like extremely happy if it was over 100%. So they were 137%. That is great that it's moving to a bit more of a stronger online brand. I would say that the Getting Personal brand was probably a little bit weaker. 10% was probably a little bit lower than what I wanted. So yeah, I think that on that side, the Getting Personal probably underperformed, but I think the Card Factory online sales that did overperform. So yeah, I mean I will give online sales a 10 out of 10, but I'd give Getting Personal sales probably about a 3 out of 10. So a bit of a mix. But I guess the brand that I want to do well is Card Factory, because that's going to, that's what people are going to look for. So yeah, I'm happy that was the better performing one. Sales, but the thing as well, we've got to think as well is Getting Personal. Like Card Factory Online is like kind of only just been updated, where Getting Personal's been around for a while. So yeah, I mean, we know that that's more of an established brand as well. So that growth is never going to be insane. So yeah, I just think that maybe I expect to Getting Personal to be a lot more towards like a 20 or 30%. So that's where I think it underperformed there. Sales to trading partners over the period grew by 63% compared to the previous year. So the trading partners we know about obviously is like Aldi, we know about the Reject Store. Obviously the Reject Store as well, they've had a lot of problems with COVID and being shut. So obviously I think there's a lot more potential there. And obviously Aldi partnerships kind of ramped up now. So 63% is definitely a lot better than what I thought as well. So the two key turnaround things that I were looking for, which was this online sales, was strong. The partners were very, very strong as well. So from the turnaround play, there were very good numbers from that point of view. I'm happy with that. So yeah, recovering following the first natural lockdown exceeded board's expectations, building to sustain positive like-for-like sales early October 2020, with the shop estate fully open, assuming the current national lockdown for non-essential retailers does not extend beyond 30th of April. Existing bank facilities of 200 million would be sufficient to meet the current requirements. So realistically, we're getting a little bit of a statement here about the sales. I mean, they're on about the stores being pretty good sales, but I kind of expected that, so I'm not really going to touch on that too much. Obviously, you got the Christmas period as well coming up, so they should go up really. So there's nothing really on that point of front that was amazing, but we got a little bit of information about the financial side of it. So we know that Card Factory will obviously be burning through a bit of money right now. And obviously, if non-essential retailers extend beyond the 30th of April, then that's going to be the problem. I think they'll be fine raising cash, they did it before. They'll be fine getting some cash and raising it. So I think that realistically, 30th of April, our Card Factory shop's going to be open by then. I think it's probably a 60-40 shot, 60 that they are open, 40 that they're not open. I think that we'll see in March time the easing of restrictions. So I think that maybe we get in April. It's going to be, I think it's a close one whether we do see Card Factories open by 30th April. I'm more swinging towards they will be, because we'll have a bit more a vaccine rollout by then. We'll have a lockdown playing parts as well. Obviously the warm weather I think is proven to help the virus situation. So yeah, I think that should be okay, but nevertheless I don't think it'll be will affect the company too much. And we got here about obviously the footfall in December was down 46%. So we knew that obviously people were going to go more and more online. So yeah, that was fine. We knew that sales weren't going to be great because people wanted to avoid going into stores and everything. They restricted the amount of people that could go in at once. So yeah, we knew that was a bit of a problem. But it says here, despite the challenging environment, the business built momentum to achieve sustained positive like-for-like sales of 17% from October to closure of stores across the UK on or before the 3rd of November. So yeah, I mean, we knew that, like I say once again, we knew that the sales would increase. So I'm not going to look into that too much. I'm more looking at the turnaround play here and how it's doing. And the turnaround play numbers were amazing, and we knew the shop numbers were going to be awful. So yeah, I mean, hopefully we'll see what happens. I think everything around on the turnaround play was looking good. The only little bit was that Getting Personal could be a little bit better, but still not. At least it moved in the right direction. Pretty much everything on the storefront I'm going to ignore because it's one of those you've got it opening, you got it closing. There was no guidance given for 2022 financial year, which is totally understandable. But yeah, I think the turnaround plays were positive, and pretty much everything on the storefront. Even though the Card Factory are making it look positive, I expected it to be positive because it was awful. So it's only going to get a little bit better with the Christmas rush coming in. But the key things that I was looking for, they were positive and they were good. And yeah, I think that it's still going to be a kind of a tough kind of 2-3 months, but yeah, I mean, we'll get this time next year, we'll have a good idea how successful the turnaround play's been, and how good them partnerships carry on going, how long them store sales will go, and then we'll actually get decent recovery numbers on like the high street and understand how that's doing. So yeah, from that point of view, like, it was okay from that side of the sales point of view, and yeah, I think from the turnaround play point of view, it was good. I think if you were going to ask me for a score out of 10 on the Card Factory ones, I'd probably give it a good, maybe a 7 or 7.5 out of 10. I think everything was where I wanted it to be. It wasn't, I would say the Card Factory online sales were the thing that was probably a little bit higher than what I expected. Even the partnerships was probably a little bit higher than what I expected. It was just the getting personal. If that was a little bit higher, I could give it definitely a 8.5, 9 out of 10. That's the only thing stopping it. But yeah, everything else, it was a pretty decent earnings. The marks that for the turnaround play are starting to show through, which is good. So yeah, I will see how we going forward and what the restrictions are for like loosening the lockdown. That's the next thing to try and get some of these store sales back. But yeah, it was a decent earnings from Card Factory, so pretty happy on that point of view. And yeah, that's today's video, looking at all the earnings. Hope you enjoyed it. A lot of information thrown at you on this one. So yeah, I think tomorrow what I'll do is I'll actually do a little bit of a mini roundup of some of the news elsewhere. Taylor Wimpey also brought earnings out. Theirs weren't too bad. It was kind of overshadowed by Barrett, I feel. Barrett's were definitely stronger, but hey, I think that was kind of the two that everyone wanted to hear from, so hopefully it was useful. If you could, smash the like button. If you are new, make sure to subscribe, and I'll see you on tomorrow's video.